Hello everyone and welcome to episode number 13 of the Candlestick course for beginners. My name is Mr. Crypto Tracker and I'm going to teach you how to trade with candlesticks. Before we start this episode, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on to get notified when a new video comes. In this episode, I'm going to talk about Marubozu Candlestick pattern. This candlestick pattern is a lesser known pattern among traders, as it's rare to find it on trading charts. However, Marubozu formations are easy to identify once you know what to look for. Once the Marubozu pattern is spotted, you can determine how effective its signal may be based on the pattern's location within a larger trend. While not occurring frequently, Marubozu patterns can be found on any time frame. In this episode, I will discuss what the Marubozu candlestick pattern looks like and how to trade it once you have spotted. So here is our learning objectives: the definition of Marubozu candlestick pattern, how to spot them on any time frames, and how to trade this pattern. So let's start with this question. What is the Marubozu candlestick pattern? If one candle pattern, the Marubozu candles look like a rectangular block because it has no wicks or no shadows, any lower or upper shadows. It is a technical indicator used to predict the future direction of an asset's price. The Marubozu pattern indicates that an asset has been trading strongly in one direction as it opens at one extreme and then closes at the other, as you can see here. There is no upper or lower shadow wicks, and it's a very strong candle. Prices have not traded outside of the opening and closing price extremes, implying that a strong directional trade has been taking place. To distinguish a bullish Marubozu pattern from a bearish one, simply consider the color of the candlestick body. If the color is green, it's a bullish Marubozu, and if the color body is red or black, it's a bearish Marubozu. The bullish Marubozu candles pattern implies that the price opened at the lowest point and closes at the highest point. This is the lowest point and here is the highest point. This happened because buyers were in control of the price for the duration of the candle's construction. This candle can be a monthly, a weekly, daily candle, or even a 1 hour candle. It doesn't matter. The bearish Marubozu pattern formed when prices open at the higher price for the candle's formation and close at the lowest point, as you can see here. In other words, the open is the same price as the high and the close is the same price as the low, since there is no upper or lower shadow. The message behind the Marubozu pattern is simple. Prices which trade strongly in one direction can often lead to a continuation and follow-up. There are 3 different places within a larger trend where the Marubozu pattern may form. The first is at the beginning or kickoff of a new trade, as you can see here. It was in a downtrend, then we saw some sort of trend reversal here, and then this Marubozu appears, which is an early signal for a new uptrend. Or it can happen during it can happen in the middle of a trend. As you can see here, the uptrend is already started, and then this Marubozu appeared, which signals more upside is coming. And the last one as a blow off to a major trend about to reverse. So we already have an uptrend, then a Marubozu appears. It can appear close to a previous resistance area, which can be a signal for a trend reversal probably. At least you have to be cautious if you see a Marubozu at the end of a trend. In an intraday chart, you might get a perfect Marubozu candle. However, it's very difficult to get a perfect textbook form of Marubozu in daily, weekly, or monthly chart. Here are different forms of Marubozu candles that can be seen in candlestick charts. The first two sets of Marubozu candles without shadows, you can see there is no shadow here, tells you that the market is trending in one direction with complete dominance. The other two sets of Marubozu have small shadows, as you can see, at the close. So these shadows are at the close of the candle. You will get these kind of Marubozu candles in higher trading time frames such as daily, weekly, or monthly. However, it has no impact as the power of buying or selling is so strong that it signals complete dominance of one side. All the candles signals that the market sentiment is quite one-sided and likely to continue in the same direction. So when you are looking for these patterns on any charts, don't look for a perfect pattern like this. These other forms are acceptable as a Marubozu, and it can be either in the open of the candle or in the close of the candle. And a small shadows to the upper or lower sides can be acceptable, and we can call that Marubozu. In the coming slides, we will go on a live chart and look for different types of Marubozu. But how to trade Marubozu candlestick pattern? So let's start with the bullish one. The bullish Marubozu forms when the price trades swiftly to the upside. The candle's open forms the low price, and the Marubozu closes the candle at the high price. Once you spot the Marubozu pattern, consider the part of the larger trend in which it has formed. As you can see here, the bullish Marubozu appears right after another strong candlestick pattern, which loosely resembles a bullish Marubozu. You can see here there is a very negligible shadow to the downside, and so we can call even this candle a Marubozu based on what we discussed here. This double combination appears toward the beginning of a new trend, which suggests that the trend is just starting. You would rarely see an isolated Marubozu running against the main trend all by itself. So when the bullish Marubozu appears, the trader can expect more upside potential. So as a result, opening the trade on the next candle, here it can be the entry point for going long. And you can place a stop loss just below below the low of this Marubozu, or you can put the stop loss below of the recent low. So this is how we can trade bullish Marubozu pattern. And let's talk about the bearish scenario. The bearish Marubozu is created when the candle opens near the high opening price and close on the low. These candles suggest a strong downward trend has been enforced, leaving behind a big red or black candle with no wicks. As you can see here we have another candlestick pattern. You can call it tweezer top. It's almost a tweezer top. And then a downtrend started. Suddenly we see this big red candle with negligible shadows to the upper and lower side. So we can call it a bearish Marubozu. And at the start of the new candle, we can enter to a short trade and put the stop loss either above the high of the Marubozu candle or a little bit above of the recent high. So this is how we trade bearish Marubozu. So let's go on a live chart and look for Marubozu. Here, this is a Bitcoin chart, and this is the monthly time frame. So let's start with the monthly time frame to see whether we can find these pattern or not. So as you can see here, this is a long candle, but the lower shadow is a little bit longer than what we expect to see to say it is a Marubozu. But since the open has no shadow, the shadow is negligible, we can call it a Marubozu, but it's not a perfect Marubozu. So let's look for another one, then see what we can see here. Yeah, we have this candle here, as you can see, no lower shadow and a small upper shadow. This is a bullish Marubozu, and you can see the previous candle was another Marubozu too. So let's look for another one. So this one, this candle here, this can be another Marubozu, and also the next one. But the next one, the upper shadow is a little bit longer than what we expect to see. But since we are in a major uptrend, we can consider these as a warning for us that the trend would be about to reverse. And this is another one, another bullish one. This bullish Marubozu appears right here. It was the previous high, and this resistance breaks with a Marubozu. So it's a strong signal for trend continuation. Okay, let's go to lower time frames, to weekly time frames, and see what we can find on weekly. In weekly time frame, here we have this one. It can be a bearish Marubozu. We can call this one Marubozu too, because the shadows are negligible, but it's not a perfect one. Let's look for another one. These candles, they are not a perfect Marubozu, but since the body is much larger than the wicks, you can call them Marubozu, but it's not a perfect one. Anyway, so this is for the Marubozu pattern, and so let's summarize it. The Marubozu candlestick pattern is generally great for assessing market sentiments, as it signals a continuation of a current trend. When this pattern is spotted on a chart, especially if it's early within a new trend, the buying pressure pushes the price, thus continuing to trade higher. And if the Marubozu was spotted toward the end of a major trend, then be aware, it could signal a reversal lurking nearby. So the Marubozu formation is easy to identify. Its usefulness is contingent upon analyzing its location within a larger trend. We discussed about this point. And so this was the last episode of the candlestick course for beginners. Please go through different charts, try to identify all the patterns you learned so far, and probably I will start a new series of candlestick, like more professional candlestick course for traders, especially for new traders. But this course is the prerequisite for the upcoming course. So please watch this series a few times, and it would be great to share it on your social medias, share it with your friends, and let them know about this course and use it. So have a good time and see you on the next course.